I spent time in 3 real estate offices this week, talking, of course, about the Fed meeting that happened this week, but something that no one's talking about when they're talking about the housing market right now, and I am going to talk about it, and it's the home ownership rate in America. I want to welcome you back to another episode of Making Sense of Your Market. It's Friday, August 1st, 2025. Happy birthday to my wife, Jenny. This week's message is super relevant. A lot of people, I've been in the mortgage industry for 19 years. I see people, I talk to people that know that I'm in the mortgage industry, and the first thing that comes out is, how's the market? Is everything going good in the housing market? I've heard it slowed. Okay, we have this thing in our brain called recency bias. For the last 10 plus years, you list a house, it sells in 3 days, it sells for above asking price, multiple offers, and that's not happening necessarily right now. So is that a bad thing? No, it's not a bad thing. You list your house right now. It might sit on the market for 14 days. In fact, in Snohomish and King County, average days on market right now is 14 to 28 days. That's not a bad thing. But since the last time you sold a house or knew of a friend selling their house a year ago and it sold in 2 days for $10,000 over list price, that's just not the market right now. Doesn't mean it's a bad market. The other thing that I talked a lot about is data, year over year sales. So median home values year over year are going up. So you've got, yes, we have more inventory. Yes, it's taken a little bit longer to sell the home, but guess what? Home values are holding strong. Homes are still selling. I think this is a great market, super healthy. It's a very, very good market for home buyers. I think it's a great market for sellers. You've earned appreciation. Maybe if you sold 2 years ago, you would have made a little bit more, but hey, it is what it is. Hindsight's 20/20, right? So the reason why I say this is that the Fed met this week, okay? And the Fed kept the Fed rate unchanged. I'm gonna come full circle about home ownership rates in America in 1 second. The Fed kept the Fed rate unchanged because Jerome Powell feels that the economy is fine, that unemployment is okay, that inflation is down, but with the tariffs and some of the new money coming into America, they just want to hang tight. So let's go back to how healthy the market is right now. If you look at home ownership rates in America, you have to understand that home ownership rates in America is literally the heartbeat of the US economy. So the percentage of homeowners that live in a home, not the percentage of investors, not the percentages of mortgages, it's the percentages of homeowners that actually are living and occupying a home. Right now, I'm going to read this. 2025, it's 65%. In 2024, it was 0.3 of a point lower. So nothing really to write home about. Now let's talk about highs. The high was in 2004 to 2006 when there was fake money. It was before I got in the mortgage industry, so I wasn't involved in that. It was 69%. The low, 1955, when they kind of started tracking this, and it was at 55%. So you had the emergence of FHA loans and government loans facilitating home ownership. You had, a lot of jobs coming into the market. The strength of the middle class was strong back in the 50s, and that got that in a matter of 10 to 12 years into the 60s. So if you take out 2004 through 2000 to 2006, we've always had the home ownership rate in America has always been in the mid 60s. So that's really, really good. That's where we're at now. So home ownership is still the American dream. The market is still very healthy. I spend a lot of time studying data. I'm a real estate investor. I get mortgages for a living. I advise people on the largest financial decision of their lives daily. And I believe personally and professionally that real estate is an incredible opportunity right now. So, summary, Fed kept the Fed rate unchanged. It's teeing up a nice Fed rate drop possibly for September. Remember, when the Fed drops the Fed rates, mortgage rates will indirectly fall. They're not directly tied, they're indirectly tied, all right? So we can expect some ease potentially maybe at the end of the year. I've heard economists say, don't plan on a Fed rate drop for the rest of the year. That's fine. Hey, we were promised Fed rate drops 2 years ago and last year, and it never happened. So it's all good. Life is good, business is good, real estate is good. If you have any questions, let me know. hosting a homebuyer class next week. I'm hosting a couple of real estate agent events. If you're either the two listening to this, I want you to reach out to me. I'm doing some special things for real estate agents right now that are helping them be more professional, sell more homes, and add more value to their clients. Home buyers, I'm prepping you for this market, all right? So reach out. I'd love to be a resource. Have an incredible weekend, and we'll see you next week for another episode of Making Sense of Your Market.